Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature and does not take into account your personal objectives, financial situation, or needs. Before acting on any information, you should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the hosts, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
Good morning, everyone. Welcome to Financial Planning Thursdays with myself, Alex. Hopefully this time we can record this because I think last time we just went live and it didn't record and upload. So if you're here, amazing. But if you're not, you might not be able to hear this again. So thank you all for jumping on. Looking forward to a great discussion. So guys, let's begin with a couple of things that happened overnight, or I guess yesterday. The inflation rate came in at 3%. On the high end of where it should be. So, we've been speaking about it for the last couple of episodes, and I think it's super important to keep track of where things are at because, that's going to influence where the interest rates will likely go as well. So, we had a couple of rate cuts already. There's a couple of rate cuts that are looking like they might be coming through before the end of the year. With this latest inflation figures coming through, it will most likely mean that they might have a reason to pause. Obviously, there's other data that's important that needs to come through as well. But ultimately, you need to keep track of it and apply that to your strategy. So let me rewind back to last week. So I know I didn't upload to different channels. However, we chatted about different super funds. Actually, before I do that, let me just have a look. We've got a couple of people jumping on. Good morning, Rosie. How are you? We've got Patty. Good morning, mate. So guys, last week we chatted about different types of super funds that you can have in relation to your super money, right? So a quick recap: industry super fund. We've got self-managed super funds. We've got retail super funds, and we've got corporate super funds, right? So those are probably 99.9% of the super funds that you will be exposed to or you will ever come across. So we talked about differences between them in terms of costs and investments. But what I want to chat to you about today is actually the investments part, because I think that is typically a very common question or discussion point that I have, not just with my clients, but also with just people outside of the clients that we work with. So what I hear and what I guess always comes up is, oh, my super fund did so well, right? And then as you go through the motions of asking the questions, oh wow, that's amazing. Let's chat about it. I'm just super curious to know why and what has happened, what investments you have in there. And I would say 6 out of 10 times they would not know what's in the portfolio, or if they do, they'll say, okay, it's inside an investment that I was given when I joined the super fund. So that's typically, you only probably get like 2 out of 10 people that know exactly what they have within their super funds. And I would say half of those would be holding a self-managed super fund. So going back to that conversation, I'm always intrigued to find out, all right, what's a good return? Because some people say good return is 20%, others might say 5%, right? That good and bad needs to be clarified to understand, what we are talking about here. And that kind of reminded me of a conversation that I had just this week with one of my clients where, we had a meeting. I sort of went through the motions about, what's happening in the economy, locally, globally. And then, I gave him the return for the last 12 months. And the return was, let's just say, around early 10s, right? So early 10s. And, the response that I got was, oh, is that all? And I said, okay, well, hold on a second. Let's rewind back and, see why it has returned this particular return. So we went through the motions, went through the asset allocation, what contributed, what detracted from the portfolio. And it turned out that, 45% of their portfolio was sitting in the defensive assets. So as we know, defensive assets are your cash, fixed interest, bonds, things of that nature. And then the rest is sitting in the markets. So that kind of, straight away to me said, all right, well, hold on a second, 10%, you should be, that's a really good result for the allocation of that nature, because as we know, bonds and fixed interest, for the past probably 12 months, you're averaging out about 4 to 5%. And then if you look at the Aussie and international markets, you're sitting somewhere maybe early 10s to mid to high 10s if you are looking overseas. So in combination, I thought that was a really good return. But then when we spoke about it and I explained, look, if you want to go higher in the return sort of scale, you need to take on more risk. And that's when they kind of pushed back and they said, oh, no, it's actually really good, right? So from that perspective, super important to understand what is good in terms of returns and what is not so great, or what you would not accept, essentially. Then we moved over to the client's partner. And the client's partner actually had a slightly higher return, and they were almost 100% invested in equities, right? And those equities, they weren't just the market brought equities. They were a specific equity portfolio that we put together through different various fund managers. And again, the question arose, well, how come, well, hold on. Why did my partner get so much, her return is so much higher than mine? So again, had to go through the motion of explaining the, higher risk equals higher return, but also, it also can work the opposite way. If the markets tank, then, that return is going to get suppressed quite quickly. And, it could turn into negative numbers relatively swift. So, looking at those two portfolios side by side, you can see the big variance in terms of return and risk appetite. One thing I didn't mention, they did have a big gap in terms of age. So that's why we had a slightly more conservative portfolio for the older client. And then for the partner who was much younger, we had a much higher risk exposure within that. And, there's many reasons for that. But ultimately, going through the motion, you tend to forget where you've started in terms of your risk tolerance and your investments to where you are going, right? And right now, like we literally just finished up with the reporting season with the equities market. So, it's a really good time to step back and have a look at the returns and performance of your portfolio and adjust it accordingly. The other thing I would say is that, majority of the investments would be held inside the super fund. So, you might be limited by the investments that you can have exposure to, right? So like we spoke last week, if you have industry super funds, then you probably have these already baked in investments that you kind of have to go into and do a lot of research. And I'll be honest, it's really difficult to actually get a full breakdown of what a balanced investment has within that option, right? So as opposed to if you jump onto something like, I don't know, Vanguard, BlackRock website, again, they give you all the details around what the top sort of 15 or 20 investments are within that portfolio. So a little bit easier to find out, so you kind of know where your exposure lies. Obviously, it's a completely different story with the self-managed super fund, where you're the one who's driving the ship, so you know exactly what's in there. You've got full discretion as to what you purchase. So and this is why sort of that 1 to say 10 to 20% of people that invest, they actually fully understand their strategy and where they're going and what type of return they should be expecting. So as opposed to being surprised when we chat about returns, they're kind of like, yep, got it. That was my expectation. The market is up, so I'm expecting a decent result. The market is down, I'm expecting a little bit of a lower return this year because I'm aware of what is happening. So, and these podcasts as well, it's a super good sort of level for you to listen to and understand, all right, well, where am I going now? So coming back to my first point that I made around inflation, right? So again, we've been here not even that long ago, probably say 24 months ago when the inflation was sort of ticking over above 3%. Of course, it was much higher, sort of 7-ish and whatnot. But, what does that mean? Well, when inflation goes up, that means that the value of your money depreciates. So if you've got holding cash, well, then your money is losing value. So that's why you try to move your funds from your wallet into an asset, whatever that asset might be. Property, shares, commodities, art, whatever it might be, or invest back into yourself so you're able to generate more income. So the point of today was really just to give you an overarching idea about different investments within different super funds. Industry, it's already set for you. You got to use them. They are become a little bit more flexible with a little bit of dabbling into the equities. But again, if you don't know what you're doing, you'll most likely make someone else wealthy. Then retail and corporate super funds, much more open. So you get a much larger investment pool. So you've got access to a lot more different investments. And self-managed super fund, you do everything. You've got access to everything, right? Nothing is off limit. So as long as it's there for the retirement, then nothing is off limit. So perfect time to take a step back, have a look at your performance, have a look at the investments, adjust your portfolios to suit the narrative that we are in now, and also look for the investments that might have already passed their due date, right? So, speak to your financial advisor or accountant who's able to help you navigate through this as well, and adjust it for the next 12 months, right? So inflation is likely to stay higher, I would say. That's what we're sort of expecting. So you want to adjust your portfolio to suit that narrative. Think about industries that are, can adjust to inflation, and industries that may struggle for inflation, right? So, I hope this helps, guys. I do want to cover off on a couple of key topics in the upcoming episodes, and I'm just trying to find the right time for it. And I want to make sure that all the recordings and everything are working, so then we can refer back to them in the future. So I'm not sure whether this will record. I know it's definitely live because I can see people on the show, but ultimately give me a couple more weeks. Hopefully next week I'll have everything sorted out, and then we'll go into deeper things like, just to give you an idea, I want to chat about sort of this change that's happening to the bond market, and the US debt, and what and a little bit of crypto in there as well. So I want to sort of chat about that, how that's all connected together. What else do I have on my agenda? I want to chat about a little bit about the risk factors, so, your life cover, your disability, your income protection. Super boring, I know, but something that you must have as part of your strategy. And hopefully from there we'll have some couple of other topics. So on that note, guys, enjoy your Thursday, enjoy your long weekend if you're in Victoria, and we'll catch you next week. See you later. Bye.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.